data has come this morning in general terms because the most important thing of the week and in fact the most important thing in this month, I think we be the inflation data that has come learning 8:30 a.m. this morning. Then let's get started. As you know, what we heard, the data released this morning is 3.2%. Analysts compared with 3.1%, which was the estimated data, a little above the expected. The core inflation data is also higher than estimate, 3.8 versus 3.7. That was the estimate, with a slight reduction to the previous, but then we go to the serious trend of this data. In the 16 recent months, as and would we do in terms of the change, we began to determine or find something that we have been thinking about. This is potential of possible risk that is sick of reacceleration of inflation. Um, Although indeed the specific figure for February is not excessively high, that what we have been be also determined after analyze the behavior of basic materials and gasoline, in that if the market does don't sufficiently take the decision of the message delivered by Federal Reserve next week, and the behavior of basic materials doesn't have as estimated by Federal Reserve, there could be a risk of new acceleration here. I think it is one of the reasons why perhaps the only in this moment the only player in the world who haven't thought the change in sentiment from negative to positive and explicitly talking about JP Morgan, which since the beginning of the year was very negative of the market, but analysts at the end of the last week have changed to the market due to the bullish market. When you listen, Mr. Jamie Dimon, the president of JP Morgan, he continued his point of view that there is a risk on the United States going into recession. I believe that we must pay close attention to this data, especially to the accumulated data, because when you see here in the chart is indeed that the power of beginners last extension, the very pronounced fall that we have presented in inflation when it's go to the variation data of the basic monthly inflation, of total inflation, and the core inflation, the United States. We can see that indeed since last August, this data I present today is one of the highest variation that we have observed in recent months. That is for 0.44%. There is called the accumulation, that is positive variation in some commodities like gasoline, had presented also acceleration in housing price that been observed during these last 2 months. Even when we see the data, look, the annual is bad CPI core a variation of 6.85. This observed at the end of 2023. Only data excluding the housing terms began the C variation in continuing positive variation. The question here is, what is the next move for the Federal Reserve and can expect to for the next meeting? When you see the variation 3.2, these all items show most relevant variation at the top. In the event, everything was with, remember that reactivation on housing sector, everything as with the food as well. The bottom only in February, sorry, is variation of in the last month I mentioned before. It was positive variation in the price gasoline and commodities, but notice that the previous month, unlike it, the happening as a specific setback. So while it's true that for us, everything that's to do with inflation is high correlated, perhaps gasoline and essential items to determine the future behavior of inflation. The reason why are seeing positive variation in this moment, despite having data is worse than expected, placed in this. When investor saw in this morning intraday chart, investor learning that data was higher than expected, the market reacted negatively, like 7:40 a.m. Well, of course, when one goes to the detail, while in this moment react positively, precisely all the items driving the inflation, reactive the inflation towards to the top. This item have to do with energy. I speak mainly of gasoline. Well, look at negative variation. This is a contradiction that have in this moment. Let's say that a specific way. At perhaps I will believe the reason that Federal Reserve looking in total bulk will say yes, we have to see higher value inflation in the money provided. However, this to do all to do with energy that do see the less so strong that established in gasoline price, and the reason is monetary possibly continue around expecting about 50 days. When you see the probability of the Federal Reserve will make a change, previous week was 97%. Now, after Federal Reserve, after data, this probably is 99% in March. However, is radical change in June meeting. The previous week, we had the probability of reduced interest rate by 55%, but in this moment, after the CPI data, this rise to 72%. Let's look at the top with future contracts. I begin computing this data. Let's say the real time is because the general, when you look this data in CMA, is crucial. Confirm the probability near to 70% here. And return to retailer, the market today is giving a low priority to gasoline in variation on price energy. In other words, it's essential to monitor the price evolution of gasoline to determine if in some point we could observe reactivation or recurrence on price increase. So here is the scene, the bulk inflation is rising. Specifically, in fact, today energy price is falling. For the reason the market is calm, but in long term, review is more can see in real time evolution on gasoline price, especially understand that because the conclusion will have to determine many changes in Fed monetary policy and conclude where the months is monitored the evolution on gasoline in the United States. It's not relevant important factor, but definitely remember this May meeting after March meeting when we see the June. Look at another essential factor here. Everything that the housing, hospital, and everything was with rentals, and the equivalent here we basically seen all the sectors on the Standard and Poor's. The orange bars because we are observing the evolution in the same sector in March. When you see the real estate with a variation of 2.1% of the main sector, look the return while we're monitoring the previously. We were seeing the development, but look also in March, energy changed positively 3.4%. So it's why see specifically in monthly February negative variation in energy price and gasoline price, the market react positively to this negative variation in energy price, but Be careful, because in March, when we are seeing positively reaction of variation on price and not so much. So next week we will hear moderate and even positive from Federal Reserve, and still the history for in March and end of March. Let's hope that is will be happen, but most likely wrecks some this week. Uh, this week as well, we also have another, let's call Coles, Petco, Dix, Dollar General, McDonald's, and other ones. The large company in the United States, and as well Leonard. Leonard is one of the biggest companies in real estate sector. So we have a amount of data that help us to understand what is the trend of the market in retail sector, and as well in the constructions and housing market in the United States. I waited for the inflation data and time to determine what is the reading like afterwards. The people in an investor sentiment, the speed remaining 71% positive in the week. The last week was 78%. So we don't have a lot of much changes. Now let's see how react the portfolio to all this news. We have the return until yesterday of 2.170%. We are the first in the monthly region. That is very good, but draw attention to this time. Radical difference in the extent the rest of the players of the managers in the world. In the other words, we have more than 200 basis point difference staying the average, almost 200 points staying the Standard & Poor's. But we go look the chart. Let's chart the performance and the trend. Let's say maybe we play better in the energy and real estate sector. We have in the portfolio, until the last month, 156% versus 93% from the S&P 500. I will not focus much on there. The moment is not strong. We have 80% in the consumer sector, 60% in the telecommunication sector, 40% in the financial sector, and 30% in the technological. This portfolio is very like a no equal way, but this is not correct word, but only we have a very diversification in all the sectors. Our principal bets at the moment are Apple, Google, and Berkshire and Hathaway. Look at our technical indicators, called GTI indicators, keep maintaining between profit and losses for the Standard & Poor's. It's an erroneous signals. This is the trouble when the shopping market start to begin and the other players start to lose money. But here, this is interesting point. The area is between 5,100 and 5,080, and this is a small range. There are going enter with the week where the market practically going to be dead, because all the people will be wait for the Fed decision of the next week. So the key point here is wait for the potential break up above 5,200. This is the key point, maybe foresee the market going to bullish more above to this level. We are above all the market, but we rent near to 10% this year. Let's see if we can finish the first quarter in this level. And remember, for this week, we can see the CPI impact. As well, the next week, the market will be weighted Federal Reserve meeting. And of the finish of this week, we have PPI, retail sales, and jobs claim data to finish the week. We have to finish the return of 2.70% compared with the 0.40%. All these risk data is here. You can see in detail in the YouTube site. And as well, the most significant bets this week are NVIDIA, AMD, and Lean. To finish, just please read the disclaimer. Thank you so much for your time. Thank you. Have a nice week.
The webinar has ended. Thank you for joining. Goodbye.